What is going on, everyone? My name is Kyle. I am a full-time options trader and the founder of Opinicus Holdings, the premier options trading community and education provider. Wanted to jump into this video here talking about why swing trades and overnight exposure, generally speaking, is going to be difficult into quarter two and potentially into quarter three of 2022. It has to do with what we've seen with the recent weakness over the past weeks and months and the structural damage that has been done under the hood in most of the growth names and some of the more popular stocks. And what this basically has to do with is the structural setup as it applies to price action. So many traders are familiar with the Wyckoff cycle as well as Stan Weinstein stage analysis. And so that's pretty much what we're going to be looking at here today. Now, if you're unfamiliar with Wyckoff cycle or stage analysis, basically both refer to four different stages within the kind of lifespan of a stock. And I will go ahead and put a little graphic on the screen here for you so you could get an idea of what that looks like. And so basically what we have is stage one. Wyckoff is going to call this the accumulation stage. Stage two, that is generally speaking when the stock is going to be moving higher, breaking out of that stage one base. Wyckoff is going to call this the markup phase. Stage three, also known as distribution, depending on which kind of school of thought you're looking at here, is going to be that kind of high base that you see there on the graphic before the stock starts to eventually downtrend, which would be known as mark down if you are following Wyckoff. So what we have here in a number of these stocks, just looking at SQ, basically what we've had here is just to give some context to the idea here, and let me flip over to the weekly chart instead of the daily. So what we've had is a massive rally in a number of the growth names and a number of the more popular stocks due to COVID and the various dollars that were being pumped into the market. So you can kind of get a sense of what it is we're talking about here with the accumulation, markup, distribution, and markdown, as well as the stage 1, 2, 3, and 4 cycles of the particular stock move. And so what we're looking at here in SQ is you can clearly see the stage one base here, followed by a strong move. And we've got the stage three, otherwise known as, again, the distribution, and then the move lower in the stock. And so ideally, what we would want to see here as traders, and if you're an investor, that's okay too, but what we're looking for here is more of a stage one kind of move for this stock to go ahead and make. And then we see that breakout, potentially a retest of that range high before eventually continuing higher. Now, where traders are finding themselves in trouble, especially lately, is a lot of traders are getting caught fishing for a bottom fishing, trying to call a bottom in the market. And in some regards, this is going to be okay depending on your time frame. Now, if you are an options trader, your time frame is very important because of the contracts that you are going to be purchasing. So if you are an options trader and you are catching this type of move and selling once you have this type of consolidation, that's fine. But if you are an options trader and you're buying, let's say, 60 days till expiration calls, and you're expecting this stock to go ahead and return to these levels that we were trading up here only a couple of months ago, well, you're going to find yourself in trouble. And this is where a lot of traders who are swing traders are struggling currently. They are getting the start of this move and then finding themselves either within this bit of chop, this sideways action that we're seeing here, which is of course not good for options, and it's unproductive for equities as well, or they're catching this move higher, thinking this is the start of a V-shaped recovery, and then they're finding themselves getting caught in a pullback lower. And so the psychology behind this is basically what we have here. The thing to understand about this is I'm just going to go ahead and continue to use SQ as an example, as we're dealing with a stock, and this is pretty much going to be true for most stocks across the entire market, at least some of the more popular ones that folks are trading. Now, what we have is a lot of overhead supply. Those that are familiar with volume profile will see the huge volume node that we have here. So just think about the sheer amount of shares that have been traded over the course of, from November of, it looks like 2021, or excuse me, 2020 into November of 2021. That's an entire year worth of trading in a fairly, granted, it is a fairly wide range, but now we're trading at prices that are much lower than what we were doing up here. So you're going to have a lot of traders that are stuck in positions from these higher prices, from these kind of 260 to 200 range prices. This move down was, relatively speaking, fairly quick. And so what you're going to see is traders and investors are willing to unload those shares at a loss that they bought up here on any type of initial pop in the stock. And that's basically how this stage one base, or this new period of accumulation, begins to build out. Now, the problem is as swing traders, a lot of what we're going to be seeing is stocks, go ahead, if I switch back to the weekly chart, is stocks set up, a rather large accumulation base or stage one base before we see that markup period. Now, the best area to be involved with a stock like this as a swing trader is going to be somewhere around here, as the stock starts to make that the beginning of that stage two move out of the stage one base and begins that kind of markup phase. That is where you want to be involved as a swing trader, is right through here. Now, if you could see how long this prior base took, I mean, once again, we're looking at an accumulation period that lasted about a year here. And so if you find yourself in a stock, I'm seeing a lot of charts looking like this right now, the SQ. We're seeing this across the board in a number of names you could look at. Well, NVIDIA is not as clean because this one actually has held up with some strength. So not the best example. But if we look at, for example, Netflix, what you'll see here is a lot of these stocks are just now starting to set up that base. So you don't really want to be the first person that is getting involved here, unless you are doing it with the intent for a very quick reversal, and you understand this thing's likely going to pull back and go ahead and build out that long stage one base. Then we start to see again that stage two or markup kind of cycle of the stock. And this is where we want to be involved, right? Either on the break of the base or the retest of highs that holds. And so if you're a swing trader, if you are someone that focuses primarily on the overnight exposure, this is something to be aware of. This is something to be cognizant of as we continue to trade into the year. There are some sectors that have shown that type of action that you want to be involved with. One of them is going to be the gold. We have seen, some great action in gold as of late for swing traders and for the folks that are looking for that overnight exposure. And once again, you've got, a long period of the stock basing. Now it starts to put in that kind of markup move. We've got a bit of a pull back into this moving average cluster, and now we're starting to see that push higher again. This is also true in the oil names. We've seen this in the oil names. These are some of the names that we're trading with the Traders Think Tank. Some of the names were day trading as well as swing trading. So what you have here is very similar to what we like to see. You've got a period of, number one, just to give context to what we're looking at here, you've got this period of mark down. Basically, it's just straight down. So you could imagine the early traders that were, or the early swing traders that were getting involved early in here, kind of fishing for the bottom. They may have caught this initial pop, but like we talked about, this initial pop was quickly met with all of this overhead supply. And so you've got strong selling again in the stock. Now, if you're a swing trader, depending on your time frame, you're probably taking losses through here, or you're just going to continue, assuming you have time on the contracts, or you're trading equities, you're just going to be back holding this thing for, a period of months. This happened in March. And so if you're getting involved through here, looking for the initial pop, it's not until November that we start to see that kind of true bottom and then the move higher. Then what we have there again is, a pullback, and it starts to act more constructively. And so if you are getting involved in one of these pops here, I mean, you're looking at holding this thing for 2/3 of a year before even breaking even. And so what you really want to do as a swing trader is wait until you have a kind of clear base to work with over a long enough period of time. What we don't really want to see is this type of move. Now, you can make money here and you can get involved here. That's not what I'm saying at all. I'm just saying for that kind of sustained markup period where you can hold this thing and not have to worry about it too much, you need a lot of accumulation. You need that kind of big stage one base, and these things just take time. And so we saw this initial base here, solid move up, and then another base develop. And now we're starting to see kind of that nice stage two move. Now, as the moving averages once again start to catch up, you may have another little bit of accumulation here, maybe some sideways, and then another opportunity to take this higher. So if you are a swing trader, this is definitely something you want to be keeping in mind. As always, if you have any questions, feel free to leave them below, or you could reach out to me in the Traders Think Tank, part of the Opinicus team. Thank you guys for watching, and I will see you in the next video.